the Bank of Canada just announced that they're going to hold their key interest rate at 5%, which is widely expected in the economy, as we've seen a major slowdown and we're seeing inflation also stay at a steady pace. And it's not increasing, but it is showing signs of decreasing, so the Bank of Canada felt more comfortable at holding the rates here. Now, one of the things we have to look at is there's a lot of speculation in the marketplace that since the Bank of Canada is holding rates, there is a good chance that this is the peak, this is the end of it, and they're going to continue into 2024, and there is a possibility of rate cuts coming. And we have heard a lot of news in the marketplace about that. Even one of our major economists in Canada, Rosenberg, is predicting that the Bank of Canada will lower rates going into next year, and they say they're going to lower them to about 3% because they expect inflation to reduce to about 2%. In my opinion, that is highly unlikely. This is something that his points are very, very valid in the sense that it's because it's a concerning situation. If the rates don't go down by next year, Rosenberg is claiming that the economy will come to a very, very slow pace. We'll go into a deep recession, possibly a depression, and cause a major crisis amongst homeowners because debt levels in Canada are at record highs. And that's something he's correct. If we don't lower the rates, and if we do go into next year in 2024 and the rates don't come down considerably, like by 1% or 1.5%, total to take us to about 3.5%, of the Bank of Canada rate, we're going to see major difficulties on households. The economy is slowing, the unemployment is rising, inflation is still very high, their debt obligations have skyrocketed, and we're going to see a lot of people, lose their homes. We're going to see a lot of people lose their jobs. A lot of people are going to lose their vehicles because they can't make the payments. So this is something that he's correct, but it doesn't mean it has to happen. Just because something needs to happen doesn't mean it will. Bank of Canada's sole priority is to control inflation. That's it. The Bank of Canada monitors interest rates so they can sustain the value of the Canadian dollar, so households are not losing value when they go out and go shopping. And that's happened. If any of us, we don't even need the Bank of Canada to tell us what's happening in the economy because every household is feeling it right now. So they are going to watch that very, very closely. Their main priority is inflation. Just because economists are predicting next year the rates will go lower, and they can. If something happens in the U.S., they start to lower rates quite a bit, it can force Canada to do the same thing. But U.S. is also concerned about inflation. They are also talking about lowering rates. If they do, their economy is going to skyrocket upwards again. And then it's going to lead to massive inflation. We've seen this in the 1970s. The same thing happened. We had high inflation. They raised the rates. They thought it was okay. It was too hard on the people. They thought they had done enough. They lowered the rates and inflation skyrocketed higher than before. And then they were forced to raise rates higher than they previously had them. And they kept them at that high place for years to come, which has had a devastating effect on our economy, but it did reduce inflation, and that's what they went after. The Bank of Canada does not care about anything like the way they care about inflation. So we're going to get a lot of articles. A lot of these economists were predicting that the rates would not be going up in 2023 as they had. So the economists do have predictions, like myself. I do have predictions. I look at the data, I try to understand it, and based off of that, I make a decision. The Bank of Canada is going to review the economy. The Bank of Canada is going to look at the inflation rate, and the Bank of Canada is going to make decisions off of that. They're not going to necessarily do what people need to get done. We need the rates to go lower. Our mortgage payments are too high. They understand that. But they need to control inflation, and they're going to focus on that, not necessarily what we need. So regardless of what the economists are saying, we get reports all the time from CIBC, from Royal Bank, from TD Bank, predicting the same things. There is a possibility, absolutely, they could lower rates next year in 2024. But if they do that, everybody's going to rush back into the housing market. Everybody's going to think the worst is over, and prices of everything is going to skyrocket again. And that's going to be contrary to what the Bank of Canada wants. They want inflation at 2%. Lowering rates will make inflation go even higher. So until we see some kind of major job losses in the economy, and we're starting to see that, we're seeing major layoffs. The banking sector is laying people off because their mortgage industry is slowing down considerably. The investment industry is slowing down quite a bit. So they're doing major layoffs. And they're not the only ones. You're going to see in 2024 across the board, many companies will be restructuring and laying their employees off. When people get laid off, it has a dire effect on the economy, which causes people to spend less, which causes inflation to go down because demand of things lessens. This is not going to happen overnight, these job layoffs. It's going to have to go throughout 2024. The unemployment rate will probably go much higher. Now, even if inflation does come down to the levels that we need it to, having high unemployment also has devastating effects on an economy. It has devastating effects on the real estate market. So it's like a double-edged sword. Yes, we can lower rates. Yes, we can help the economy grow. But if we have high unemployment, then people are not going to be able to pay their debts, their obligations, their mortgage payments, their car loans, their line of credits. So we're still going to see our economy in 2024 going into a deeper recession, in my opinion. It's not the end of the world. We will claw our way out of this. We will eventually turn it around. We've been through this before. It's nothing new. It's just that the Canadian debt levels have never been higher. So it's real estate with Raza. We're, like I said in previous videos, we're working with clients all the time. It's a reality we have to expect. And it's a reality we have to accept to the fullest because it's happening right now. The rates are taking a dire effect in the economy. It's having a dire effect on real estate prices. And going into next year, could the rates go lower? Yes. Will it make inflation go higher? Yes. Does the Bank of Canada want that? No. So they're going to go after what they want. Everybody else can have predictions and opinions as much as they want, but the Bank of Canada is going to go and hunt after inflation. They want our economy to slow, which is happening. They want unemployment to go up, which is happening. So we are moving in the direction of recovering from this. But in order to recover from it, we have to go through a lot of hardship. We have to go through a lot of slowdown. And that's what we're seeing coming into 2024. But I am personally very happy the Bank of Canada did not raise rates because I know a lot of people in a lot of financial strain. And it's not easy out there. Again, guys, it's Real Estate with Raza. You need any help, you reach out anytime. It's 416-995-7317. Like I said before, you don't have to necessarily put your house on the market, get it sold. Just give us a call. We can help you restructure. And if you're going to renew your mortgage, give me a call. I have excellent contacts in the mortgage industry just to advise you on how to negotiate with your bank to get your mortgage renewed. And if you take a 1 year, a 3 year, or 5 year, it's very important to understand those matters and where we see rates going. And you don't want to lock in for too long of a period because if rates do come down in say 2 to 3 years, then you want to have that opportunity to lock in for a lower rate at that point and not be locked in for a full 5 years. So again, guys, Real Estate with Raza, reach out anytime. And until next time, you have a wonderful day and we'll talk soon. Bye-bye.